Welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmia, and it was a day of absolute reversal of fortunes for Indian stock markets. We started okay just when Indian markets were all set for a big day of trade. We saw a sharp reversal, and we saw a sharp reversal across the board. So what led to today's reversal? And how should one dissect today's price action in mid and small cap stocks? We'll discuss that for you on Markets Tomorrow with the help of Saurabh Mukherjee. He represents Ambit Capital. Amrish Balaga will join in with his take. He represents Edelweiss Financial Services, and Ashwini Gujral with his technical analysis. But before I kickstart the panel discussion, let me just set the stage. I've already introduced the market action. Like I said, it was a day of sharp reversal for markets. The extent of volatility, quite gut-wrenching, honestly. It was a swing of more than 100 points for the Nifty from the day's high. The good bit today is that markets today corrected on very low volumes. That's largely because institutional investors or global institutional investors are not really back from the holiday, and a little bit of selling also had a very strong collateral damage. Bank Nifty, which was looking all set for a strong day at about 11 o'clock, at about 12 o'clock reversed. So the Bank Nifty was the real fulcrum, so to speak, in today's market action or market volatility. Sharp reversal in real estate stock. No one likes it. Market, you just love to hit them. First, they're the last ones to move up, the first ones to correct. High beta stocks. Now, this is the problem area. If you are really trying to understand the market reversal, GVK, GMR, JPA, Suzlon across the board, it corrected. IDFC had a tough day. And sometimes, markets just correct without any news. Prices go up and down, and regions they follow. Reasons could be global volatility, it could be quarterly season, hard to dissect that. But for the moment, IDFC, PNB and L&T, they had a bad day. Power Grid, TCS and Infosys, they bucked the trend. What really reversed? Let's look at some intradays here, and trust me, these are correct intradays. Escorts, it took a sharp reversal of more than 9% from the day's high. There you go, Escorts on your screen. Days high above 140, days low about 125. JP Associates, it cracked on strong volumes. Flattened about 2 o'clock, corrected, and then collapsed in the last 40 minutes of trade. Karnataka Bank, another high momentum stock, that also took a hard knock. And Adani Power along with Delta Corp, they also had a tough day. So the similarity in some of these momentum names is that they corrected as a group, and they corrected in the last 45 to 60 minutes of trade. Ashwini, it just took 60 minutes to reverse the momentum and crush the market action. How should one read into a reversal? And do you think today's sharp reversal is more like a buying opportunity in disguise?
Well, it's not a buying opportunity. The problem is that the rally that we had, before this decline was a fairly weak rally. And we were range bound for about 7 days. Today in the morning, we broke out for a little bit, and then we came crashing down and broke down from the range on the downside. So now from here, since it's come post a rally, it's come at a strong resistance level, chances are that this upswing is over. Also, the Bank Nifty had a fairly key level at 11,550, 600. Again, we crossed those levels very marginally, and the Bank Nifty collapsed from there. The entire strength that we were seeing in the morning was on the back of banks. And once, banks were unable to build on morning gains, the market came down, and I think 6150 should get taken out on the downside now. And maybe we'll get closer to 6,000 before we can have a meaningful bounce.
Balika, jump in with your analysis. Who sold today? There was hardly any negative news flow. Nothing came from global markets because most of the globe today was shut.
Right. But it seems that some Chinese data was negative, because of which you had Europe opening lower, and I think because of that you had that selling. We saw some basket selling also. I think that's what rattled the markets, but I would see this as a buying opportunity. In fact, I don't see the markets really going much below 6150 over the next few days. So I think it should be a buying opportunity for people who had missed the rally.
So Mukherjee, what do you make of the price action in PSU banks? it was a strong December for PSU banks, but today PSU banks also reversed. Do you think PSU banks still qualify as a weak group, a group you should not buy on a decline, you should in fact sell on uptick?
I think both the PSU banks and also the large private sector banks, I think both of those we believe are pain points. The rally in PSU banks is largely predicated on the fact that they are seen to be too cheap to be not bought. So at 0.2 times, 0.3 times, the view out there is they're too cheap to be ignored. I'm not so sure that's the case. I don't think anybody out there really has any sense of what actually lies inside the balance sheets of these banks. Even the 7, 8, 9% restructured, 7, 8, 9% troubled assets that these banks are claiming, I think is an underestimate of the true state of their balance sheets. Remember, if 10% of a bank's assets are troubled, that's pretty much its entire net worth wiped out. So I'm not sure PSU banks buying them is anything other than a speculative trade at the moment. And as history has repeatedly shown in India, if you do speculative trading, you're not going to make too much money in the market. So I don't think there's a rational basis for pushing PSU banks. With the top private sector banks, it's obviously a different ball game altogether. They are well run. They're much better run than the PSU banks. The asset quality is better. But the challenge there is, you have a valuation challenge with firms like HDFC Bank, which are trading still at 4 times book. And the second area of challenge is, say, with ICICI or with Axis is, again, asset quality. You don't quite know how much pain is still left in the balance sheet over the next couple of years. If someone had to invest in banks, I would go down into mid caps. I would look at names such as ING Veshya, City Union Bank, Federal Bank. The valuations are more sane and the asset quality is less stressful over there.
Ashwini, I've got a sense from you on the Nifty, and according to you, Nifty could go below 6150. But what happens to performing mid-cap stocks? Because that's really been the story. Optically, the Nifty reversed by 100 points, but we saw serious collateral damage in some of the performing mid-caps.
Well, what goes up comes down. Since mid-cap, small-cap has outperformed on the upside, chances are it will outperform on the downside. But, things like Tata Elxsi, etc., even if they correct sharply, those corrections should be bought. Basically, tech and pharma. The tech index, by the way, is the only index which on a daily basis is still in an uptrend. The rest of the, bank Nifty, everything is in a downtrend. So the strong stocks should be bought on a 3 to 5 day type of a decline. But, all of these rate sensitives and, economy sensitives and capital goods, etc., they've been going through trading rallies, ones that have terminated and are likely to face selling.
Amrish, what are the triggers which could or which potentially would generate upside momentum for the market? Because I was thinking through it, there are no triggers on the short term. All the good news, some would argue, is already in the price.
Right. Election rally, I think that's the big rally which we are seeing over the next 4 or 5 months, and in that rally you will have corrections like these, which again, like I said, should be utilized to buy, because this election rally will continue up to April, May, as in when the elections happen, because clearly it's a hope of a better government going ahead, and based on that, fundamentals will take a back seat, and whenever you have macro data announced which may not be palatable, you'll have corrections and utilize those corrections to buy.
Ashwini, what should a trader monitor tomorrow? Like you said, that the selling in Nifty has come at a crucial level.
Well, basically, it's a ranging market. But what's also important is that this high that we've put in place is lower than 6415. So this is also a kind of a retest. So what you need to see is that whether we are able to regain 6260, because the range that we've broken is 6260 to about 6340. You'd recall yesterday's range was 25 points, today's range was 160 points. So clearly there has been a range expansion on the downside. So if we get back into the 6260, 6340 range, then maybe, this downside was a one-off. But if we continue to move lower, then you should be sure that we have basically made another top at 63.58.
Manish, you mentioned that this is a good buying. This decline is a good buying opportunity. So what is on your radar? What are you advising your clients? Are you allocating capital? Which are the stocks you're buying?
Other than core portfolio where we have large caps, among the mid caps we are clearly bullish on capital goods, infra, couple of banks, a couple of these pharma stocks. For example, we are bullish on GMR Infra, which is getting asset light in the past few months. ILFS Transportation, Crompton Greaves, Voltas. We are buying DCB among the private sector banks, and among the mid cap pharma, we are clearly bullish on Dishman Pharma.
So let's stay with pharma and let's stay with mid-cap pharma. And Saurabh, jump in on Torrent Pharma and Cadila. These are two stocks which have been underperformers for 2011, 12 and 13 are on your radar. In fact, they are your best buy recommendations for 2013. Why is that? 2014, why is that?
So that in a way is the construct of the portfolio that we published on 23rd September. We had a look at the market and said, let's identify decent companies, good balance sheets, decent management teams, which haven't already run up. So for example, in auto, rather than going for Eicher Motors, which is a superb company, has delivered enormous returns for our clients over the last couple of years, rather than going for Eicher Motors, we went for Excite, which is a company which is rather disappointed over the last couple of years. And similarly in pharma, rather than going for Sun Pharma, which has had a tremendous run, we've gone for the names which haven't delivered. And the reason we are making that switch is worth understanding. In the last 3 years, the market really hasn't paid heed to valuations. Growth stocks have done very well. High ROC companies have done enormously well. And our belief is gradually the market will start paying heed to valuations. And as a result, the outperformance will shift from champion franchises such as Sun Pharma, such as Eicher Motors, which are great companies, to companies which are decent but are undervalued. And that's the construct in which an Excite comes into the fray, a Federal Bank comes into the fray, a Torrent Pharma comes into the fray. And that's, I think, the way it's worth thinking of the market. There's three big shifts that you'll see. You'll see a shift to cyclicals, you'll see a shift to cheaper companies, and you'll see a shift to small and mid caps. If you can play these three trends through 2014, I think you'll outperform the market quite comfortably.
Amnish, is there merit in what Saurabh just flagged off that 2014 may not be year for large cap and absolute quality? Quality stocks have ruled Indian markets for 3 years now. But do you think now markets will start looking at revisiting mid and small caps?
Absolutely. I think the first 5-6 months is going to be the time for the mid-cap and the small caps to do the catch-up. And that is when you'll have the return of the Indian investor back to the markets in addition to the FIIs, because large caps are more or less seems fully priced at this point of time. There could be an upside since we're talking of the Nifty going to about levels of 6,800, 7,000 in the next 4-5 months. Surely the large caps will move, but outperformance will come from the mid-cap and the small caps.
Ashwini, for the moment, which is the strongest Nifty 50 stock?
That's tough to say, but definitely tech stocks, and they're all going in for a correction. So anytime you find, Infosys, TCS, HCL correcting, they should be bought. I think the big story there is not the rupee, it's the Nasdaq bull market. And these stocks are basically behaving like they were doing in 99, 2000. So that's a story that should continue. So on all declines, these tech stocks remain strong buys.
Now for some stock ideas for tomorrow morning, and for that Gargi standing by.
Well, Nikunj, firstly on MCX India, we have seen some buying coming in the last couple of weeks for that counter. Remember, two important triggers. Firstly, the FMC talking about boosting volumes in the commodities market. We know that after the NSCL crisis, we've seen some bit of decline coming in as far as the volumes and the interest in the commodity market is concerned. FMC has also said that they will look at reducing curbs for individual investors. They also want to encourage hedging in the commodities market. So all of that will be a big boost for MCX, which is one of the biggest commodity exchanges in the country. Also remember the stake sale in MCX, and that probably is going to be a buying indicator for the company going forward. Today, however, the stock was just about 1.1% up, just flat at today's session. The other one is Adani Enterprises as well as Adani Power. We know that there have been some irregularities, some probe in fact that's come in from the DRI as well as the ED. They have said that the valuation of the import equipment that had been inflated, and probably on the back of that we saw some nervousness coming in, and Adani Enterprises about 5 5% decline. Rani Power also seeing some pressure today. That could continue in the couple of trading sessions. So this could be a selling candidate from dealers.
Okay, thanks a lot for that. Ashwini, what are your top trading ideas for tomorrow?
Well, on a trading basis, I think IDFC is a sell with a stop of 111, target of 99. Adani Enterprises is a sell with a stop of 266, target of 247. And Power Grid is a buy with a stop of 97, target of 110.
Please jump in with your top 3 picks for 2014.
In fact, it's just not top 3. I've got a couple of them. Like what I said earlier, GMR Infra, I'm looking at levels of about 30. Crompton Greaves, which I recommended, I see levels of about 175, 180 over the next 4 to 6 months. And Dishman Pharma, again, level of about 140, 145.
Saurabh, what are your top 3 picks then? Where do you think there is decent visibility? The business seems to be turning around and the valuations are still supportive and attractive.
I think amongst the bellwether names in the key cyclical sectors, that's where I really focus on. So Maruti Suzuki continues to grind out decent numbers. Market share has either held constant or picked up in each of the last 6-7 months. Yesterday's numbers were no different. As the post-monsoon flush of demand comes through in something like February, March, I think Maruti Suzuki will pick up further action. Also, as the political parties spend money on rural India, given that 40% of Maruti's domestic demand now comes from rural India, Maruti should benefit from that. So decent numbers coming through in Maruti, I think should be a staple holding in portfolios going ahead. Moving on to construction capital goods, I think L&T obviously is the bellwether there. It's difficult to see big pickups in order flows this side of the elections, but on the other side of the election, I think public sector capex will pick up quite decisively. So the ONGCs, the SAILs, the NMDCs, the Coal Indias will start spending money, and L&T is almost the only construction company that will benefit from that. The Delhi-Mumbai industrial corridor orders will also come through in the next 3-4 months. L&T almost certainly likely to win some business over there. So L&T and Maruti in auto and capital goods will be 2 bellwether stocks. And third stock I would pick is a mid-cap company, Cummins India. It's a genset company, well-run, Indian subsidiary of the American multinational, natural beneficiary of the rupee at 62. Global demand seems to be finally picking up for gensets for the reasons you folks mentioned a few minutes ago. As the West picks up, as the global economy picks up, global demand is picking up. A quarter of their sales come from exports. I see that number rising to around 40 to 50% over the next 2 to 3 years. Domestic demand for gensets might take some time to come through, but at current valuations, given the quality of the franchise, I think Cummins India is worth buying.
Amrish, you've told me what you plan to buy for 2014. What's on your avoid list? Where are you underweight?
Underweight is real estate, again, where we have seen a decent movement in the last few days. I think that's a selling opportunity because we still see the property prices are yet to crack at the retail level. I think that would happen in the first half of 2014, and when that happens, you'll see a further fall in the reality space. So that's a clear sell.
All right, Amrish, Ashwini and Saurabh, gentlemen, appreciate your time and thank you for joining us.